Hi everybody, this is Wednesday, October 21st, 2009. Well, another day, another new low for the year for the dollar index. I spoke yesterday about the reversal Tuesday rally in the dollar. Well, that rally was short-lived. It got sold pretty hard here today. You had new 52-week highs practically across the board in the currency spectrum. The euro closed above 150 for the first time for the year. You had new 52-week highs in the Swiss franc, the Australian dollar, the New Zealand dollar, to name a few. The dollar index traded below 75 in the cash market for the first time this year. We closed at a new closing low, I think right spot on 75, right near the lows of the day. I don't know whether the dollar weakness ultimately helped cause the stock market to sell off. We had a small rally in the market in the afternoon. By the end of the day, the market had sold off. The Dow was down close to 100 points. Generally, when the dollar is weak, the stock market paradoxically had been strong. Now, today it was weak. I don't know if we can say that that's a new trend. It could just be a one-day trading fluke. I know that there was some negative news coming out of the financial sector. One of the Wall Street analysts downgraded shares of Wells Fargo, which is the nation's largest mortgage lender, to a sell. Now, that shouldn't be surprising to everybody. I mean, that should just be a, duh. I mean, of course they're a sell. Why anybody has been buying mortgage lenders and banks is beyond me. I know the prices have gone up, but the prospects for profits and dividends down the line have not improved at all. I mean, I've always said that if you can get a job at a Wall Street investment bank or a financial institution, particularly the ones that are getting government bailout money, you should do it because you're probably going to get a good bonus and make a lot of money. But there's no reason to own stock in any of these entities because there's not going to be any real profits there. There's going to be nothing for the shareholders. All the bailout money goes to the executives that are running the companies and are lining their own pockets thanks to their buddies in Wall Street that are helping them do it. But it certainly shouldn't surprise people. Well, I'm sure maybe some people were taken by surprise, and so the financials were weak, and that could be the real reason why the market was lower today, not the weakness of the dollar. But the weakness of the dollar should be causing a lot of worries on Wall Street if people really understood what was going on. You know, there's been a lot of discussion in the financial media recently about the weakness of the dollar. I happen to be watching a discussion on CNBC on Kudlow's report yesterday. And of course, everybody seems to be missing the point. I mean, Larry Kudlow talks about why we need a strong dollar. He talks about king dollar. And he wants the government to pursue a strong dollar policy. Of course, in his mind, that policy is merely talking about how much we want a strong dollar and maybe the Federal Reserve raising interest rates from zero to some very low rate that's higher than zero. Well, none of that is going to give us a strong dollar. You know, I've made the analogy several times to a school student who cuts class and doesn't study and smokes dope and who wants to get A's. Well, it doesn't matter if he has an A policy or wants to get A's. If he continues his poor study habits, he's going to get F's. And we can want a strong dollar all we want, but the policies that we're pursuing are going to give us a weak dollar. If we really want a strong dollar, we've got to change our policies. We need to aggressively raise interest rates. We need much, much higher interest rates. We have to pull the plug on all this government stimulus. We have to let the free market work. We have to let firms fail. You know, we have to let the economy restructure. That's the only way to get a strong dollar. But nobody wants to do that. You know, and it's like, you know, everybody wants to go to heaven, but nobody wants to die. We're not going to have a strong dollar until we reform these policies. And unfortunately, even if we do the right thing, or even if we immediately pursue policies that will ultimately strengthen the dollar is going to weaken in the short run. There's no way around that. That's because of all the damage that has already been done to our economy by the government, by the Federal Reserve, that unfortunately is going to necessitate a weaker dollar. It's not a good thing. It's the unfortunate consequences of all these policies we've pursued. But if we wanted a strong dollar, we never should have gone down this road in the first place. Now, if we did aggressively increase interest rates, the dollar would probably spike in the short run. But then it would roll over as people realized the implications for the U.S. economy of a much, much deeper recession and more failures in the financial sector, more bankruptcies, a weaker housing sector, a weaker economy. That would ultimately cause the dollar to go down anyway. But if we at least pursue the right policies, the dollar will fall, but it will stabilize, and it will eventually be able to recover the ground that it lost. But if we continue to pursue the policies currently in place, the dollar will continue to fall in perpetuity. It's going to keep falling not only because of the mistakes of the past, but of the mistakes that we continue to make in the present and the mistakes that we're threatening to make in the future. Now, today the bond market was very weak. I think bonds dropped about a point, meaning interest rates went up. I have no idea if this was related to dollar weakness or not, but one day it will be. One day the bond market is going to respond to the weakness of the dollar by moving substantially lower, forcing interest rates a lot higher, and then we're going to really see a much bigger problem from the weak dollar. We already saw it today in the crude oil market. You know, oil prices now, I think, have traded $82 a barrel. I've been talking on this blog about the fact that oil prices were going to be rising because of the weakness of the dollar, and here we are now at 82. This is the new 52-week high, I believe, in the price of oil. I think the coast is clear for oil prices to move north of $90 a barrel. I've said earlier in the year that I thought we could return to $100 a barrel oil before the end of 2009, and that very well may happen. Although if it doesn't happen this year, I think it will certainly happen by next year as a direct consequence of the weakness of the dollar. Anyway, I'm headed off to CNBC. I'm doing another hit on Fast Money. If you missed that, I'm sure it'll be on YouTube. I've been doing that show kind of semi-regularly. I noticed, though, that they had promoted me on the show by, again, talking to me or referring to me as Perma Bear Peter Schiff. You know, they like to call me a perma bear because it kind of discredits me, because it implies that I'm just permanently bearish, that I don't actually think about things and make rational decisions. I'm just bearish no matter what the evidence is. And also, by saying I'm a perma bear, but then by saying, look how much the market has gone up, it implies that I've missed out on all these profits, that my clients have missed out on profit opportunities. And again, that tries to discredit my message. Of course, viewers of this blog, my clients understand that I'm not a perma bear. I'm bullish on a lot of things. I own a lot of stocks around the world. I own a lot of commodities and foreign currencies. But I have been bearish for a long time on the underlying economic fundamentals of the U.S. economy and of the real inflation-adjusted returns out of U.S. assets. And unfortunately, one thing that people in the media don't want to acknowledge is that that view has been the correct view. And it's the people who have just been cheerleading the U.S. economy and the U.S. stock market year after year after year, the perma bulls. They're the ones that got it wrong, not me. Anyway, that's it for today.